ladies and gentlemen. A very warm welcome to today's ET Unbiased webinar session, Get Personal, Banking on AI to help customers reach their hopes and dreams, powered by NTT. Financial services were one of the first sectors to understand the promise of the big data revolution and the wave of new technology that has come with it, including artificial intelligence or AI. AI is a powerful tool that is already widely deployed in the financial services sector. It has great potential for a positive impact if companies deploy it with sufficient diligence, prudence, and care. AI is on its way to becoming mainstream in financial services within the short term. Fintech companies are more widely leveraging AI to create new products and services. A larger share of fintechs is pursuing a more product-oriented approach to implementing AI by selling AI-enabled offerings as a service. There is a trend towards AI mass adoption, with half of all AI leaders having simultaneously implemented AI in several key areas, such as generating new revenue potential, process automation, risk management, customer service, and client acquisition. All AI leaders expect to be mass adopters within 2 years, solidifying the hypothesis that there are significant economies of scale in the application of AI in financial services. In the session, we will deliberate with an esteemed panel of seasoned leaders from the banking and financial services on the impact of AI on the customer services, how it has helped financial institutions to better understand the needs of the clients and help them to offer customized services accordingly. But before that, I'm delighted to invite Mr. Michael S. Goodman, Vice President, Data, Intelligence and Automation Advisory, NTT DATA, to set the context for the webinar. Mr. Goodman has spent his career devoted to understanding, managing and advancing the digital fabric of modern corporations, data analytics, organization, process, and technology. Before joining NTT DATA, he has worked with BBVA USA, Bank of America, and Anderson Consulting, now known as Accenture, among others. Mr. Goodman is a certified Six Sigma Master Belt and holds patents in process measurement and distributed computer resource management. Over to you, Mr. Goodman.
Thank you. Good evening, everybody. Today, as we said, we'd like to talk a little bit about some research that we've done. NTT DATA is very active in obviously in data management and in the topic of AI and helping to foster the adoption of AI and the progress of AI throughout a number of industries. What I'd like to talk about today is some research that we've done recently to really ask some questions about AI. And it's grown, the research, to some extent is grown out of almost a frustration in dealing with the evolution of online channels and working with our clients and helping them really truly recognize the potential for AI. And so let's look at this challenge for a minute. So this is something that we're all familiar with. This is a scenario that I've discussed with different clients, and so we've created this character, Ava. Ava is 55 years old, is a consultant, resides in Alabama in the United States, married, 2 children in college, and but Ava would like to retire in 10 years. Wants to move to Vermont to open a bed and breakfast, but also is a bit of a sports car enthusiast and dreams of owning a Ferrari. So how does Ava, deal with the bank? And, so we're all familiar with the process of, opening accounts and establishing a banking relationship. And so Ava talks to, or providers, be that, in today's world, either in a physical channel or much more likely in an online session. And then over time, the bank, we all want to hear the bank is using the geolocation and they're leveraging the technology of the mobile app. And so they detect that Ava's on a car dealership. She's walked on and is now looking at the dealership. So the question is, so where does the story go from here? And typically, today the story might end in, oh well, this is a great opportunity. Let's push some interest rates to Ava and help her buy a car. Whatever car she wants. She's obviously, why would she be on visiting a dealership if she didn't want to buy a car? And that's where I've always, gone back to my clients and said, well, wait a minute, how well do you really know Ava? And you have all this other information that you really haven't looked at, and maybe it's time to really rethink the dialogue between the bank and their customers. So late last year, we did some research. We undertook a global study, both looking at responses from bankers and also responses from customers. So we did about 500 bank surveys across parts of Europe, North and South America, and Japan. And really dealing with four fundamental questions. The first one is, what does that AI bank of the future look like, and how is that going to operate, and how do people see that evolving? Question number two is an age-old one that we always look at, and continue our journey to understand what truly attracts customers to financial institutions, and what makes them want to stay, or in this case, what might make them want to leave and switch institutions. And then the third question is also one that we've spent a great deal of time thinking about and continue to think about on an ongoing basis, is really this question of, to what extent are consumers ready and willing to share their personal data in general? And in this case, if are they willing to trade their personal data for some kind of value? And that ties to this very large and ongoing emerging topic around privacy. And how do consumers really feel about the data about them, and how that data is being used? And then lastly, we wanted to understand where the financial services industry is today. What are the investments that we're making? And how are they using that to attract and retain customers? What we found, so when we looked at the study, and this study was conducted, late 2020, wrapped up early 2021. So obviously, as with all things these days, we did the best that we could to try to figure out, with respect to the pandemic and a lot of the changing behaviors around the pandemic, how many of these behaviors and these sentiments are ongoing, and sort of a shift baseline versus how much is pandemic influence that may or may not manifest as a permanent change in customer habits. So looking at the findings, not surprisingly, most of these studies tend to segment the respondents, and we did likewise. So for us, we identified a segment that we labeled the futurists, and these are people that really are willing to share their data. And they're willing, not only are they willing to share data, but they're willing to pay for individualized recommendations. And when we looked at the study, and when we think about where the industry is, this was a pretty substantial finding, because as we think about the fee models that banks use and how they work with their customers, they're still kind of at odds with what has become a very widely accepted sort of services model, and that is you get a little something for free and you get a lot more for a fee. And banking really has not fully embraced that yet. But what we're seeing is that bank customers are very comfortable with that paradigm, and they're willing to pay for increased value, and they're willing to pay for individualized recommendations. The second, really, what I would call major finding is that customers today are really looking for a different role, looking for banks to play a different role in particularly in major financial purchases. And when we ask them, and we've looked at this question over a number of years and through a number of studies. And actually, one several years ago, we got kind of lucky, and we had a study that was well timed in that it was aligned with the one of the big Facebook data distribution, data breach issues. And so it was very widely covered in the news, and there was a lot of discussion about privacy and data. And at the same time, we went out with a study that basically said, would you be willing to allow your bank to be your Facebook friend? Would you allow your financial institution to share in your personal data and share in your social media presence and have access to all that data? And to our surprise, we had a significant percentage say yes, as long as we're getting some kind of value for that service. And we went further with later studies to look at, what, do you really want the bank to be getting into the middle of major purchases? And people said yes. They said we really would rather see banks and financial institutions playing much more of this role of financial advisor rather than simply enabler. And in some cases, they actually said as long as they had the ability to override, they were interested in seeing banks actually intervene in major financial purchases. So, unlike the fraud, decline for a major purchase or something like that where fraud is suspected, in this case, it would be the bank say, hey, you said you wanted our help in managing your budget and working toward your financial future. We're declining this purchase because we don't think it's really aligned with your plan. Now, obviously, customers still want the right to override that and want to retain the control. Once we got past those couple of findings, we started bringing AI into the picture, and we found out that AI, obviously, as we all know, we're very, very early in the AI journey. And what we found is that using AI and data to provide customer advice is a #1 goal of financial institutions, but also is the #1 challenge. And so actually delivering on that promise is a major challenge for many organizations. But 81% of the institutions that we surveyed said that AI, they strongly agreed that AI is a critical part of their strategy to attract and retain customers. 93% of the financial institutions agree that personalized proactive services are key to retaining this futurist segment. Yet interestingly, only about 16% of the organizations that we surveyed said, yeah, we're actively doing this, we've got AI, we're involved in deploying it. And this study was organizations of all sizes. So, it was relatively balanced. Obviously the larger organizations had a slightly larger presence in the sample, and our focus was more on regional banks and major national banks as opposed to local community banks. But those 16%, within the study, we labeled that 16% forward-looking for financial, and those are the ones that believe that one-to-one personalized services are really going to become a competitive differentiator within the next 3 to 7 years. And amongst that same group, we're seeing a major wave of activity preparing for that time and preparing to capitalize on that differentiator. That's where, we saw between 14 and 18% of the banks we surveyed have active partnerships with service providers that are outside of the banking field, so travel experts, music, game providers, etc. Now, once we looked at those results, we wanted to dig in a little bit deeper, and we wanted to try to determine if AI and this change in relationship is really going to affect and is going to drive a change in business, right? Is going to drive customers to switch to new banks. And what we looked at is, the relationship between the customer and their bank. And we found that when we looked at the duration of the relationship, about 40% of the customers, and now we're talking about customers, about 40% of the customers that we interviewed or we surveyed are still with the first bank that they opened. They opened an account when they were a young adult, when they were going to university or whenever, and they still have that account today. 31% are dealing with their current provider as a result of some life change. And when we looked at that, right, so that's a move of some kind, right? Change driven by work, change driven by family relationships and things like that, marriage, combining households or things like that. And we think that as we're seeing, merger activity continue and growth activity continue, and a move to virtualization, that this 31%, where today 31% are saying, yeah, my current bank was a function of a move, that's going to become less relevant because banks are establishing larger footprints, and with the increase of online channels, obviously, both COVID-driven, where there was a tremendous push to we were all basically forced into a online-only paradigm, but the movement was happening prior to that. But that will become less relevant. But the other 30% is folks that are switching to new banks because of services or an evolving relationship. They wanted a bigger relationship. They wanted different products. They want different services. And so, there definitely is that futurist segment that is saying, yeah, I'm not going to just stick with the bank that I, first selected. And as my needs change and as technology evolves, I'm going to continue to look for financial institutions that are going to meet my ongoing needs. Now, the typical response to that is, well, it's generational. And, so the boomers, are going to stick, and the Gen Zs are less patient, and no surprise, you're right. But what we are seeing, so when we looked at the study, the Gen Z, a good chunk of the Gen Z that we looked at has been with their bank for less than a year. So they tend to be much more mobile. They tend to be much more agile, I guess, in terms of switching banking relationships. And they, but as we looked into the other data and the other demographics, we started to see that same turn. Now, the interesting challenge for banks as they think about that is today, the younger generation, obviously earlier in their careers, may have higher incomes, but have lower amassed, lower accumulated, lower invested wealth. And so from a banking perspective, in terms of their value as a customer, the value to the bank is represented in potential rather than current assets. But what we saw is not only are the Gen Zs becoming more mobile, but the other generations are advancing in their technical aptitude and their interest in in achieving some of those more advanced technical services. And really the move is there. And so we saw in the findings of the study that AI driven banks is a priority. We saw that it has number one problem. We see that customers of all demographics are moving there, right? The Gen Zs and the younger generations are obviously moving faster, but the older demographics are moving in that direction as well. So let's come back to Ava. And the interesting thing that I hadn't mentioned about Ava is, if Ava was already tremendously wealthy, right, was at the level where she was a private bank customer or a very high-end wealth management customer, then Ava is already getting tailored advice, potentially, is already achieving that kind of relationship that customers are saying that they want. And the challenge, and this is where AI really comes into those differentiated relationships, is that is really the only way that banks and in many cases other industries as well are going to be able to scale what is today a highly human-based relationship to larger markets, right? So banks do a great job. If instead of Ava, we were talking about Bill Gates or Warren Buffett or, Elon Musk, there's a whole team of people at likely a number of banks whose specific job it is to know what that customer's financial situation is day to day, what their plans, what their goals. They're very active in participating in that. Now, obviously, it's a large and complex relationship, but that's where AI comes in and will allow that same kind of personalization to scale to the mass market, right? To the mass affluent. So folks that Gen Z group that is just now embarking on their careers and beginning to amass their wealth. So let's come back to Ava and let's talk about how an AI-driven bank might tackle that same challenge. So again, either a human advisor or through an online channel, right? A lot of data was collected around Ava. Maybe the bank is now participating on Ava's, Facebook or, is aware of her social media. There's been some, agreement for data sharing. And so the bank has accumulated a fairly good body, and they have a pretty good understanding of of Ava's hopes and dreams and aspirations. So now they use that same geolocation, but they notice that Ava has walked onto a Ferrari lot. And so now, instead of saying, oh, well, let's give Ava some interest rates and let her buy that Ferrari, they connect the dots between where she's at. They, remember, through the data available, remember that Ava has 2 children in college. And so there's some upcoming tuition payments or whatever, college-related expenses. So instead of just pushing interest rates, the bank actually, through the app, says, hey, Ava, now's not really the right time to buy a Ferrari, right? Remember, you've got tuition that needs to be paid. You've got other major expenses. We want to keep saving for that B&B, but let's spend a little time thinking about how we can help you achieve that dream, not today, but later. And one suggestion that we have is, we've got a partnership with a rental agency. So, maybe the better choice if you want to be driving a Ferrari is, rent one for the long weekend, the holiday weekend coming up. Make the investment in renting one, have a good couple of days, enjoy driving it, and then you give the car back. You don't incur that major capital expense, and you stay on track for your financial goals. When we started sharing this, and we've presented this to a number of our clients, and interestingly, not only did they recognize and agree with the importance of moving in this direction, but they were very, very quick to build on the scenarios, and actually went outside of financial services, where we had a couple of clients that we talked to and said, not only could we help Ava fulfill her financial goals, but this same kind of technology, the same kind of model could also be used to help Ava fulfill her social goals. And one example that the bank gave back to us and said, if you really understand, building on that concept of let's really understand Ava and what she really wants to do. And they said, well, maybe not only does Ava want to open a bed and breakfast and own a Ferrari, but Ava is very concerned about her carbon footprint and really wants to participate as a good citizen of the world, and manage her consumption and her output, and her green footprint, become more green where she can. And they quickly jumped to, not only could the bank say, well, buying a Ferrari is maybe not the best purchase at this point in time, but you could also apply this with other things like maybe Ava, Tesla makes a really nice sporty sports car, much lower carbon footprint, much better for the environment, or other similar examples where Ava may be considering a major purchase that is not in keeping with her values as a green citizen of the world. And so the bank, through their network and through their ecosystem, can actually present options to say, sure, if you want to go and buy whatever you want to buy, that's great, but there are other options that can help you. And it's only with AI that we really are able to achieve that scale that take to bring that to the mass affluent and the mass market communities. So that's, in summary, that was the highlights of the study. Obviously, there's much more information that we can go into. The study's published on our website, so we can make the detailed results. We're happy to make the detailed results available, and go into much more detail. So I think with that, I'd like to pass it off to I guess to Niraj for some Q&A, and maybe move back to the panel.
Thank you, Mr. Goodman, for such an insightful session. NTT DATA surveyed nearly 5,000 consumers and 500 financial services executives in 8 countries to find out what attracts customers to banks and makes them want to stay. In this webinar, we'll discuss why more than 93% of the financial institutions surveyed agree that offering personalized, proactive services is an opportunity for growth, but only 16% of them are doing it. You'll also hear executives talk about the steps they are taking to make one-to-one hyper-personalized financial services a reality. The speakers will also touch upon topics like where the opportunity for personalized, proactive services is, and where financial institutions are on the journey right now. What AI-enabled bank of the future will look like, why partnering is key to execute hyper-personalized initiatives. For today's session, Get Personal, Banking on AI to help customers reach their hopes and dreams, powered by NTT DATA, it's my pleasure to welcome the session moderator, Mr. Nirik Singhal, Senior Vice President and Head, International Consulting, NTT DATA. He currently manages a team of business consultants that provide high-end consulting and specialized business expertise to banks, insurers, healthcare, and manufacturing institutions around the world. In his career spanning over 2 decades, Neeraj has advised institutions on digital strategy and is a regular speaker at various international industry forums, including CBOS, European Banking Day, and CEP Technology Conference. Specifically, his areas of focus include blending new age technologies such as artificial intelligence, data analytics, and blockchain, along with industry expertise to transform the client's existing business and IT landscape. Over the last 2 decades, Neeraj has had extensive exposure across industries and functions, having worked with NTT DATA, Dell, TCS, Tata Tea, Titan, and Unilever Group, among others. So without any further ado, I hand over the session to the stellar Mr. Neeraj Singhal.
Thank you. Thank you so much. So today we're going to discuss a very interesting topic, which is the adoption of advanced technologies like data and analytics in attracting and retaining customers. I think that this becomes really relevant because today is the age of hyper-personalization. As Michael spoke about the one-to-one segment and how you can really personalize to reach that individual customer, which becomes all the more important as a result of the pandemic, because the face-to-face interaction has really dwindled. And we're really going to discuss how technology adoption is also accelerated as the result of the pandemic. So without much ado, let me introduce the august panelists to you. I'll start with Vijay. Vijay is the CEO and Managing Director for ICICI Securities. He's been with the ICICI Group for more than 27 years. And prior to his current engagement, he was also the Executive Director on the board of ICICI Bank. Vijay is a strong advocate of adopting technology within financial services to improve operations and to also attract and retain customers. Our second panelist is Vipul Rungta. Vipul is Managing Director and CEO of Hdfc Capital Advisors Limited, the private equity firm of the Hdfc Group. He's been associated with financial services for more than 24 years, of which close to 2 decades has been with the Hdfc Group alone. Vipul is very passionate about technology, and he really thinks that technology can improve efficiencies in the development of affordable housing ecosystem in India. So that's a very interesting topic that he really likes to talk about. Our third panelist is Mr. Manish Madan. Manish is the Senior Vice President and Head of Digital Customer Service for claims at Aegon Life. Manish strongly believes in leveraging technology to add value throughout the entire customer lifecycle for improved customer service. And this is something that he's been practicing at Aegon Life in the recent few years. So welcome, gentlemen. I'll start with my first question to Vijay. So Vijay, if I could ask you, with your background within the bank and also having worked with different entities, what do you think is the role of technology in attracting and retaining customers?
Well, thank you, Neeraj, and thanks for having me on this event today. I certainly think it's been massive changes which are taking place on how technology is beginning to directly act and impact the stuff that we sort of just spoke about, and I was really enjoying the presentation being made by Mr. Goodman. I could completely relate with what he's saying. We've seen that it's not just only about technology, but it's a couple of things which are sort of moving in a parallel way. Technology, of course, but apart from that, we are seeing that the entire regulatory landscape is also evolving shoulder to shoulder now, which is very important in an industry, in financial services industry, considering you're moving away from a traditional way of attracting, retaining, and dealing with customers to an online digital mode of dealing with customers. So you need a strong support of the technology landscape to move along. and embrace and adapt this mode of engagement and interaction. It also requires huge amount of, I would say, data infrastructure support. And over the last few years in particular, we've seen that whole architecture also scale up. And finally, it is about consumer and customer behavior. And I think the presentation that we just saw clearly brought about the changing sort of customer behavior profile, which in a way I would say got accelerated or fast forwarded, so to speak, given the COVID pandemic impact. So it's not just technology. Technology is very important, but when these three forces, in addition to technology, come together, I think it completely changes the landscape. And I think today, if you ask me, financial services has got all the four ingredients, and therefore, I think very, very well positioned now to take a leap from where we are. We are, I think, as an industry, still at a very early stage on how technology is being used and can be used. The power of it is only being seen in still, I would say, early stages of embracement. So there is, I would say, great impact that it can have, and it is now well set to take off from here.
That's really interesting, Vijay. And I think you touched upon a very pertinent topic, which is the changing profile of the customer. So it's the Gen Z, as it's kind of called. It's, you know, they've got different hopes and dreams and aspirations, which is very different from what was 10 years back or even 20 years back, right? So continuing that conversation, Vipul, if I was to come to you, you've got a very interesting role within, again, you know, Hdfc, and you're specializing in the real estate sector as well. Do you see increasing use of data and artificial intelligence, especially to target customers?
First of all, thanks Niraj for inviting me for this panel. I quite agree with what Vijay was saying, but as far as real estate and data and analytics is concerned, please understand that real estate is probably the most under technologized sector in the world, if not in India. And even today, the entire discovery of and the process of purchase of an apartment is still as backward as it probably was, say, 40 years back. Yes, the financial intermediation business, as far as this is concerned, is taking a whole leap change. It is changing for the better. The role of intermediaries and everything is going down. But to your question specifically about data, I think it is being used now, and I'll say maybe start with the real estate selling part of it. In the real estate selling, data is now increasingly being used simply by having something which is beyond Excel sheets and PowerPoints. And I still feel that artificial intelligence is some time away, though I personally would rate artificial intelligence being a synonym for common sense, which is slightly more data backed. So common sense, we would say, is more gut feeling. This is more data backed gut feel. And if that is what it is, yes, there is increased adoption as far as data is concerned. There is increased software-driven approach to help reach out to the customer, help them experience the product, help them maybe reach out to more, having a more diverse set of choices as far as the customer is concerned. But very, very early days. I would probably give it 10 out of 100 in terms of where it probably can be.
That's really interesting, Vipul. You know, it's a completely different perspective. So what you're saying is, let's get the data first and then talk about AI. We don't even have the data at this point of time. Very, very interesting. Manish, if I was to get this conversation to you, and I know you're looking at things from a completely different perspective. You're looking at it from a customer support and service perspective, right? What do you think is the adoption of technologies such as AI and analytics as far as customer service and support is concerned? What's your view? I don't know if we've lost Manish. Okay, we'll get him back. Vipul, let me ask you another question. Again, your industry also does a lot of personalization, right? So everyone's got a different set of requirements. And as Michael talked about, he talked about proactive personalized service, right? So you try and reach your customer proactively, either it is proactive financial advice or it is some kind of concierge service. And all these are basically backed by data and AI, right? A lot of the financial institutions that we surveyed said that they want to focus on proactive financial service because it really helps them attract and retain customers. What's your opinion on proactive personalized services? And do you think those are of any use in your world?
Oh, clearly. Like, for example, a home purchase is still in Indian context the single biggest purchase decision one makes in his life, his or her life. And clearly, there is a huge play of what analytics can do. I'll give you an example. It was done on a set of 100 customers very recently, with obviously their due permission, with all the privacy things. So through a small algorithm, the bank accounts of 100 odd customers were analyzed, and wherever a person was having a recurring debit, which is akin to, say, a rental that is being paid or rent that is being paid, and if that person is also having a purchase attached to a high-end phone and a high-end car, then that is being matched to any latest offering that is being done by a niche developer in that in a 10-kilometer radius. Now, it, I think, is the order of the day. The one thing that I am very, very excited about is that the technology intervention and its impact on what decisions are being taken in the financial world is at a significantly higher pace than what most of the industry thinks it is going to be. What I am giving an example is obviously very futuristic. I thought it was very futuristic till 2 years back. And here we have where we actually managed to get 5 out of those guys to get something. And there were 2 conversions out of those 100 people, which I thought was phenomenal in the sense that without having a single checkup with that individual, simply on the basis of putting a simple algorithm on or some analytics on a mundane bank statement, you could come and actually give recommendations which are very personalized. And for something as big as a home, it is not like what Michael said about renting a car or buying a car. Okay, fine. He was talking about a Ferrari, which I'm assuming was pretty expensive for Eva. But having said that, a house is still a big decision. And if you add to that the fact that real estate increasingly is becoming an investment product and becoming more productized for most of the individuals, it is probably a sign of things to come.
So Neeraj, if I may jump in, I think some great use cases, people just explained. But I think to just get a little bit of an angle and perspective to this this whole subject, I think financial services, we should certainly not think of it in one single amorphous mass. I mean, it's there are many components of financial services, and in a way, it's a multi-speed segmentation of the industry, the way it has evolved. And I have had the privilege of working in a banking sector, and more recently now I have moved into the world of equities. While one way to think about it is financial services, other way to think about it is equities versus banking. And what one sees is that the state of evolution of banking to AI and new age tech versus the state of adoption of technology and AI in our world, there's a big difference. And it is to do with, in a way, I would say again, regulation. Regulation, I go back to that again, it has a big role to play. Banking world has got certain natural barriers, right, of entry. And therefore, you find the new age competition in that space relatively lower compared to our world. The entry barriers in this industry is so low that you find a lot of tech players, and that has really forced incumbents and players to actually move very, very rapidly because they've come in a disruptive way to our industry, which is relatively much lower in the banking lending space, given the capital requirements there, and that always adds as a barrier. Regulations there are far different, and it requires greater, it provides natural entry barriers. Not here, relatively much lower, as I said. And therefore, let me give you some use cases that we are using. For example, during COVID, we've moved into a world where we are using AI in the account opening process, right? For example, there are at least 4 processes which have adapted AI. Doing liveliness checks. When you're taking a picture of an individual, you should be sure that actually it's all done automatic, right? So there's nobody doing it. You're loading a picture of yourself. You should actually be blinking your eyes to see that the system is able to check that you're not uploading a passive photo. It could be of a non-living person, for instance, and you're actually taking a live photo. So these kind of technologies have been embedded in our onboarding process. Name matches, because sometimes these names you could enter your name as Vipul Desai or Vipul D. And these kind of things, it's able to identify this. Facial recognition, because you're comparing the picture that you've taken with a record that is there when you fetch data from the central warehouse. Sometimes that variation happens because you're probably younger when you did that, you're relatively older there, but it is still able to see the contours of your face and say, yes, it's the same person, and give an accuracy. So there are these kind of use cases that we have already adapted, and we find that what used to be an account opening journey and process for 2 days, today we go from no customer to the first trade in 20 minutes. That's the kind of power of technology.
And Vijay, if I was to continue that conversation, so you get up an interesting topic of retail versus corporate, right? I mean, the use of data and analytics and AI much more for retail customers, whether it's account opening, whether it's KYC. What about the corporate sector? Do you see enough adoption on the corporate side of the world as well, or you think retail is far ahead?
Yeah, so that's a great question, and let me give you, a perspective the way I have experienced it. I think clearly the retail side has sort of led the adoption of these kind of use cases, these kind of solutions, these kind of embracement of technology. Because it is more amenable to standard processes. I think there's a simple reason for that. Retail as a business, retail as a way of engaging a customer has got more standardization, relatively more standardization, and therefore it lends itself to use of technology. And then when you embed the minor variations that you need to handle, AI comes in very handy to handle the minor variations and take care of a process in a human-like manner. Whereas in the world of wholesale or corporate, as we call it, there the extent of uniqueness is so high that it's not always so easy to use these kind of technologies over here. Within that also you identify the more standard process items and then use tech to take care of it. But when it comes to the larger sort of aspects of dealing with wholesale customers, corporate customers, there's so much of personalization that it becomes difficult to still dehumanize it. Not just there, I would say that even for the extreme private wealth customer, the examples of Warren Buffett and Bill Gates that said, you can't use technology to serve. right? Yeah, you can use him to a point, but it's basic stuff that you can do. But when it comes to meeting the larger, you cannot replace a human. Human can be assisted, but he cannot be replaced, at least not as of now.
I think Michael will have an interesting perspective on corporate, because we're seeing the emergence of corporate and the use of advanced technologies as far as the corporate sector is concerned, because we believe that that sector is really going to be a high growth area, which is till now more or less, I wouldn't say it's been neglected, but it's kind of been balanced.
It's lagging. Yeah, it's totally lagging. Yeah.
But let me switch gears a little bit and come back to Manish. Manish, you represent a very interesting sector, which is this digital customer service and support, right? So if I was to take a cue from what Vijay talked about, he talked about eKYC, video KYC as a result of the pandemic. There are all these new concepts of customer self-service. You've got these smart apps which allow you to do self-service on the mobile. And then you've got, just the disintermediation of advisors, because overnight, nobody could go and meet anybody else. So you had the direct channel, which would provide all the support, and also for new products and services, you would go direct to the client. Are you seeing a lot more adoption of AI and data in your part of the world?
So I Neeraj, point out to two things actually. So you asked two different questions, and they are completely at two different ends of the spectrum. So as far as getting customer on board is concerned, Aegon started a journey to actually move completely digital, and largely, a journey without involving humans. At actually just before the pandemic hit us, pandemic increased the speed significantly of this entire. I will actually go where. Other panelists were discussing about things like KYC, etc. Of course, we have moved there, but we have one more complication. We also have to assess health. And we are using AI there, and these are largely models right now. So I would say that saying that we are using AI already will be a misnomer. We are not doing that. We are exploring the usage of AI to read, reading the face expressions, the age assessment. And going much beyond the liveliness check. That is largely to see if we can actually avoid medicals, because medicals definitely cannot be contactless, right? And while we are doing that, customers are lapping it up. So customers are happy not really appearing for medicals. But the problem with our sector, of course, is that the money involved is extremely high. Talking about average insurance of about 70 lakh rupees, right? And when that about $100,000, when that comes in, your assessment cannot be weak, because once you've picked up actually, and if there's no misstatement from the customer per se, you have to pay the claim. So from that perspective, we are doing a lot, and they are largely data room exercises with partners, with possible vendors, trying to see what when we are going back to data to look at what a similar mix would have looked like, and what would have been the experience if we go back to 10 years data and see that. So things are being done on data analytics. AI is just being, we're just scratching the surface, if you ask me. As far as service is concerned, we have seen this pandemic actually customers have been at the and they're far ahead of what we have been, because they've experienced not only insurance, right, not only financial services, they've experienced services like Dunzo, where you can actually send stuff to someone else with that at as low as half a dollar, right, 50 odd cents to someone within 3 or 4 kilometers, and people have lapped up to that. And that movement of customers using technology has actually pushed us to be available at their requirement and when they please, and therefore we have seen immense amount of adoption. Now, whatever we have developed and whatever is ready in terms of service, 90% of for our organization per se have moved to full digital interactions, and that was never a scene before the pandemic. So it has changed the way perspective of the customer as well. Customer is happy serving himself till the time he can. Having said that, I will actually So there was one point mentioned about, corporates and large HNI customers moving to that. I don't think that was ever the objective. The objective of technology was to reduce the mental effort which is to take care of large amount of data, and simply Pareto will take care of the fact that if you're taking care of 80% of issues using technology, you're reducing the cost, enhancing service experience of the customer as well.
Coming to the question of data, Manish, I mean, you mentioned the fact that the onboarding is humanless, right? And also the fact that you've got large volumes of data which you use. Do you also use data from smartwatches, which kind of tells you the, how much the person is exercising and all that kind of stuff, which really helps you to price your policies? Or is that too far a dream for Indian clients?
So I would suggest that while it's not too far, we are not very well supported. The ecosystem does not support it well. I'm talking about sharing information, sharing of data. We had done some experiments with some of the partners in India. Insurance does not support that well. Some countries within Aegon ecosystem, and like Spain, have tried doing it, but it's a little away. And therefore, we have to focus more on what you can get through a camera rather than a smart device. And we are trying to do that right now. Again, results are far, far away. Until the time this ecosystem does not believe in this data, it's very difficult to go live with that, because insurers cannot just take that kind of risk, because the kind of risk we are taking is very, very long term, right? We're talking about 25, 30, 40 years kind of risk you're taking. So assessment is one part. Whereas as far as data, using data is concerned to onboard customer, get information, KYC, financial summary of financial status of the customer, all that is easy stuff, and that has been done already.
Right. Interesting. So Vipul, if I can ask you a question around new products and services, because your area seems to be the hottest right now, just when we've come out of the second wave. How, do you think AI and data can really help you to launch new products and services? Especially, even in a lot of territories today, there is no physical contact. So if you look at some of the research which has been done prior to 2020, 80% of new products and services were launched and sold through face-to-face interaction at the branch, right? Now, suddenly the pandemic happened, all that changed. So what is your view on the role of technology in new products and services?
See, 2-3 things. First of all, I think it's very important that we differentiate between AI data and technology. If I'm using a camera to take this thing, okay, fine. If I'm doing some expression analysis, there is an AI angle to it. But as I said, I think it's like affordable housing term. Every project is affordable housing because somebody can afford it, and that's not the way. And similarly, every intelligence, anything which is commonsensical is AI because AI is in. So let's first differentiate that. I think a lot of things that we are talking about are technology and not necessarily AI and data backed. That's one. But to talk about new products, let me give you an example. So we are working on, in fact, we are launching it very soon, where it is a digital only developer, where you buy physical real estate, but everything starting from understanding the project to say, suppose you're buying the 15th flat on the 15th floor of tower B out of sort 3 towers, you will be able to actually see what is the view that you will get from the 15th floor from that side of the flat, because there will be some drone actual image capturing that can be done, which is not possible in the most luxurious of projects. Even today, I may be buying a $5 million home, and actually a developer will still not be able to give it to me in out of Bombay. And just imagine if you can do that for something like, which is a $100,000 home. Okay, so you can, and it's very simple to do. So we are looking at something which is end to end, starting from from product discovery, which is a simple traditional house. Product discovery, what view I'll get, what facilities I'll get, everything is done in a e-format. So actually you have a physical building but you actually can get a digital building that is being built. So I can go on the 15th floor, mark on that thing, see the view, which are real-time views, and also do the entire buying process online. So like you buy, say with Vijay, like Vijay said, equity. So he says, okay, fine, you can click a button and buy a share of ICICI Securities. You can actually click a button sitting in Vijay's room and buy that apartment, say in Coimbatore, assuming Vijay is sitting in Bombay, buying that apartment in Coimbatore with full, probably much more information about the product than you have ever had. Now, that's the kind of stuff which is being worked upon. As I said again, it is a tendency to talk about what is hot and new, and hot and new is not my sector. Hot and new is the topic of this discussion. So I think most important is not to get over obsessed with what is hot and new. We have to do some basic, simple things right. Probably the first one being that a brochure needs to present the right picture, which is why legislation was required to say that, listen, you need to put everything in place. So we are a long time away. But yes, what I'm telling you is the kind of stuff which we'll see probably, as I said, probably in the next in months and not even years.
So, Vijay, if I was to take that question of hot and new to you, where does India stand from an adoption perspective? Are there some countries that you feel, or some financial institutions that are much more advanced in adopting AI and data and analytics compared to the Indian financial institutions?
Yeah, I think we've looked at a few markets outside of India out of sheer interest, because there are some great ideas one can pick up looking around. So India, I would say it's a multi-speed world within the financial services landscape. We've heard, the different stages in which an insurance business, a lending business, and even a real estate business is sitting, an equities business is sitting. They're completely at different stages of, and their challenges and asks are also very different. So it's multi-speed. When it comes to globally, I think I've seen that the most advanced market is actually China in terms of use of AI. So some of the companies there, at least till recently, till before we had all the developments, the data flow was quite very positive from the Chinese sort of tech companies, where they've been using for a long period of time. It's also to do with the fact that they did not have competition, so a lot of homegrown tech companies have come up, very uniquely customizing to the China sensibilities or China culture, doing it in their style, in their format, their ways, and those little nuances do matter when you have to do things using tech. The other place we've seen is Israel, where the use of tech is very good, AI. To a lesser extent, I would say US and Germany. But I think India still has a long way to go.
India does have a long way to go. So Manish, one of the questions that just came up was, when Vijay was talking, the entire emergence of insurtechs and fintechs, and the fact that they are able to service customers much better than the traditional financial institutions and the insurance companies. Do you agree with that?
Yes, I do. The primary reason, of course, is the fact that customers, because of the experience of other services, do not really want to wait for getting a service eventually delivered to them. And the fact that they are being serviced like that by a lot of players around, they expect everyone to act in the same way, and they're not really bothered if insurance is different. Now, this also depends on what you want to do. So I will put it this way: there are customers who would say, "Please underwrite me appropriately, take your time, but do not delay the claim." Those nuances come in. So going by the same logic, eventually, whatever is not very high value, in terms of not having a very high impact on the eventual, delivery of product. Everything else can be automated and should be provided immediately, but customers want us to take seriously when it comes to, high value transactions. And I'm saying high value, it's not about the amount, it's about the entire logic behind some of the transactions.
Right. Interesting. So Vipul, if and this is more a question to both of you, Vijay and Vipul, either of you can take this one. So, one of the big areas of AI and especially analytics is in the area of fraud, right? Where you're using historical data and you're doing trend analysis and you're trying to predict customer behavior and try and find out if there is a spurious transaction. So maybe Vipul, I'll start with you. In your experience, is that an area where you use a lot of AI and data, or you think it's more applicable in some other areas as well?
No, it is being used. It is. I think AI will have biggest impact not on the disintermediation that is happening right now. I think the biggest impact is yet to come, which is on credit analytics. Like for example, if there are recurring debits in a huge bank statement of a person, which is digitized and is actually checked through some kind of automated system, and something which was done earlier physically and prone to errors is something that can be done. Data banks, fraud checks are part of the play. There have been, CIBIL is there, and there are a lot of other anti-fraud measures that are done. As I said earlier, I think the data accuracy is still something which needs to be worked upon for you to bank on that aspect. But yes, now for certain, especially unsecured products, even things like social media, what kind of stuff is happening, profiling, blah, blah. That is where the role of AI and all those things come in. In fact, recently we invested in a company which actually does a legal CIBIL, which it does say if Vipul is applying for a loan, it can check across all the courts in India and across 2 crore cases if Vipul's name figures in any court case in any part of the country, which is completely unheard of, and it can be a great fraud check because we have enough stories around person moving into something else and some other zone or some other geography. So all those kind of things AI will play a big role. It is playing, but the impact right now is small. But that is where I think in analytics, that is great analytics, especially where it will have the maximum impact on a financial organization.
Vijay, what do you think?
Indeed, I think fraud management is certainly a great use case for AI and ML, particularly in a lending institution, be it, let's say, detecting AML, the anti-money laundering sort of efforts. When you look at data patterns, you see abnormal flows, you see abnormal credits and debits from in certain versions. For example, you find it's very, in a corporate kind of a world, you generally, when you're doing trade, you don't always find round numbers, right? When you start finding round numbers of inflows and outflows, that there's something happening which is not unique. It could be in the domain of AML, it could be in the domain of spurious transactions, which probably may have nothing underlying below it, and so on and so forth. So data is there, enormous amount of data is there. It is now about using that data and creating models and then powering those models to determine lookalikes which are smelling of something suspicious. Systems are there, proprietary equipments, meaning models are get created by financial institutions. So to my mind, some work has already happened in this space. It will keep getting better, it will keep getting refined, and I think more sophisticated. It is also moving to the domain of recognizing, at the time of onboarding, KYC, if there is an impersonation attempt and so on and so forth. I think AI and tech have the ability to discern with a reasonably high degree of accuracy. It's not perfect yet, but reasonably high. They run into the late 80s, early 90s kind of percentage of strike rates. So yes, I think it's a very hot area, and it is already getting used, and it will probably only increase in the future.
Excellent. So I think we're almost time, but I'll take the liberty of doing a rapid fire with all three of you. So these are tough questions, so you may choose not to answer them. So maybe Vijay, I'll start with you. Put you a little bit on the spot. So if I was to ask you to name a financial institution in India, apart from yours, which is really at the helm of using data and AI in their financial operations, who do you think that would be? Or is there no such utopian financial institution in India?
I think broadly people are at a very similar stage just now. It's very difficult to say that someone is like streets ahead of the others. Actually, it would probably be more in the fintech space who are using this far differently than
the likes of Paytm.
So for example, For example, if a big tech company gets into financial services, I think they would be way ahead. Bajaj, if I have to take a name, for instance, I think they are way ahead in the use of tech.
Manish, what about you? Apart from your own.
So I would say we've seen some of that happening in GI, Digit, for example. Again, life insurance, because the kind of commitment you have for long term, we still need to see that kind of a movement happening. We are seeing some of that in China. Our own company, Egon, with TFTL is doing that, because we have a tie-up with Alibaba, for example, there, and the huge amount of data is available. But nothing in India for life insurance for sure.
Okay, Vipul.
Okay, housing finance, I think still most of the banks are doing it. I agree with Vijay. I think Bajaj is probably slightly ahead as far as the tech curve is concerned vis-a-vis the other institutions. Fintechs, I think there is a little bit of, again, an over-obsession with trying to do it too digitally. Especially something like housing finance still has a huge credit aspect to it. Probably a lot of other products still do, but which AI has still not penetrated enough. But yes,
Right.
From a customer discovery perspective, yes, Bajaj would be there.
Right. So guys, we are almost over time, but just 10 seconds. In 10 seconds, if I was to ask you, yes or no? Again, starting with Manish. Manish, so do you think AI is going to take center stage in financial services, or do you think it's just a passing fad?
No, it will take center stage, but there's a lot of time for us to reach that stage. We should be looking at data analytics first and trying to see that. It's some time for AI.
Vijay?
Most certainly, sooner than later.
Excellent. Vipul?
I think it will be backstage for some time.
Okay. So interesting, we've got different perspectives based on what business you are. Gentlemen, thank you so much. It's been an enlightening conversation. Really, thank you for all the insights, for all the examples, for all your time. I just wish this conversation would have continued for 2 hours, but we have to time this. So thank you so much. And we will be getting questions offline, and we would put it to all of you to answer those and give it back to the people who asked the questions. So thank you so much, and have a great evening. Thank you.
Thank you so much.
Thank you.
Thank you, dear speakers, for such a perceptive session. It was a pleasure hearing all of you on this important topic. I'm sure this session gave our participants some really enriching insights today. So thank you again. I would also like to thank the audience for being part of this significant session. Hope to see you soon in our next sessions. Have a good day and stay safe.